Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Thursday, January the 20th, 2011. Well, a change of trend today. We can see that we've had a candle that's made a higher high and a higher low. We can see from the previous few weeks of trading, we had a series of red-bodied candles, so very, very bearish market, rather an extreme bearish market over the last few weeks. Today we have the first candle with a green body, and that could be significant for this market. We have had a change of trend to the upside. This market may continue with the trend to the upside. There are a few areas of resistance over here, but we'll look at those in a minute. But the market has changed trend on any decisive type candle. So it's debatable whether this market will continue to rally because of the indecisiveness in the market. Now, the good thing is that we have a green body, so instead of the sellers making bearish progress, as they've made for the last few weeks, the buyers have actually been able to make some bullish progress. It was only a very small amount, but it could be the start of a new uptrend, and new trends can start in that manner with only making a small amount, and then they build on that as the trend continues to the upside. Now, we can see that we have these large shadows on the top and the bottom of the candles, and that represents, on the downside, represents sellers losing commitment, but on the top it represents buyers losing commitment. So even though the market is trending up, the buyers still lost commitment. So we've got a big battle between the bulls and the bears, and a lot of indecision in this market. Now, the market tested this area at 78.94, which is an area of previous support and resistance. We can see here over the last month or so it's acted as an area of support. So now, just on this trading day, it's acted as resistance. So that's a big area for this market to trade through today. To the downside, however, the market was testing the bottom of the cloud. And we know that anywhere within the cloud, especially the tops and the bottoms, can act as areas of support or resistance. And in this case, we've had support coming in. On the previous candle, we have the long shadow, and the market failed to close outside of that area. Today, the market tested below that area again, and the buyers came in again. The sellers lost commitment. So that's a very important area, roughly about 78.50 for this market. Now, to the upside, if the market does continue to rally, after 78.94, we have resistance offered at the top of the cloud, and that is near this previous area of resistance at 79.50. And we can see here on this occasion, and on these three occasions, that area is held as resistance. So a market that's really bound by very strong resistance overhead, but bound by good, strong support down below as well. We do have to be patient and wait for a breakout. Now, because the market's trading within the cloud, we have a neutral market. If the market's trading below the cloud, it would be bearish in big picture terms, bullish if trading above, and neutral in big picture terms if trading within the cloud. So we need to be careful of the trades that we take. Looking at the other indicators, we're trading below the Tenkan-sen and Kijun-sen, so the market's bearish in the medium term and fast term timeframes, and both of those are at the same level. Both are pointing flat, which is important for this market, and the market tends to be attracted back towards, especially the Kijun-sen when it turns flat. So there is a good chance that the market will perhaps rally and perhaps test the top of this cloud roughly up around 79.50 or so, 79.40. So over the next trading day, we do need to watch the high of the current candle and certainly up there to around 79.50, but certainly watch down around the lows and the bottom of the cloud at about 78.50.